Welcome to the day breaking news. Here's a highlight of the day. Oil rises 2% as no immediate Saudi output boost expected. New York, July, oil gained 2.5% on Friday after U.S. officials told Reuters that an immediate Saudi oil output boost were not expected, and as investors question whether OPEC has the room to significantly ramp up crude production. The comment during U.S. President Joe Biden's Middle East visit comes at a time when spare capacity as members of the Organization of the Petroleum Exporting Countries (OPEC) is running low. Part of the support is that everybody and their brother who digs down into the Saudi situation sees that they don't have a lot of capacity left, said John Kilduff. Brent crude futures settled at $101.16 a barrel, rising $2.06 or 2.1%, while West Texas Intermediate crude settled at $97.59 a barrel. Both Brent marked saw their biggest weekly percentage drop in about a month, largely on fear earlier in the week as the nearing recession would chop away a demand. Brent lost 5.5% in its third weekly drop, but unprompted by energy and security interests, arrived in Jeddah on Friday and has been expected to call for Saudi Arabia to pump more oil. But the United States does not expect Saudi Arabia to immediately boost oil production and is eyeing the outcome of the next OPEC Plus meeting on August 3, a U.S. official told Reuters. If the market was expecting an announcement between President Biden and Saudi Crown Prince Mohammed bin Salman that oil production was going to be increased, they were sorely disappointed, said Andrew Lippo of Lippo Oil Association. But I do think that in the upcoming weeks, especially at an upcoming OPEC meeting, we might see production increases out of both Saudi Arabia and the United Arab Emirates. The United States could still secure a commitment that OPEC will boost production in the months ahead of hopes, and that will provide a signal to the markets that supplies are coming if necessary. Meanwhile, the U.S. oil rig count, an early indicator future output, inched up by 2 to 599 this week in their highest since the March 2020, energy services firm Baker Hughes said. Also signaling more oil supply on the horizon of the Libya oil shop, who said crude outputs will resume after meeting groups that has blocked the country's oil facility for months. Lifting force majeure on production could mean a return of 850,000 barrels per day. On the economic front, the U.S. Federal Reserve most hawkish policymakers on Thursday said they favor a rate increase of 75 basis points at its policy meeting this month. Not the biggest increase traders has priced in after a report on Wednesday concerns that the Fed might opt for a full 100 bps rate rise this month, and week's economic data had held a Brent and WTI shedding more than $5 on Thursday to below the closing price on February 23, the day before Russia invaded Ukraine. The analysts, however, expect continued pressure on oil from concerns over the global economy. Brent has dipped noticeably below $100 per barrel this week. It is likely to continue sliding given that the recession fears will presumably not abate for the time being. Commercial bearish market sentiment has also fallen during the COVID-19 outbreak in China, which have hampered a demand recovery. China refinery throughput in June shrank nearly 10% from a year earlier, with output of the first half of the year down 6%, is the first annual decline for the period since at least 2011, data showed on Friday. Thank you for subscribing our channel. I see you in the next newsletter.